A big question many are asking is, will Bitcoin catch up to gold as gold's put in a massive 25% move within this year, whereas the rest of the markets are going down? So we're going to have a look at that. We'll also have a look at the current state of the crypto markets. FARTCOIN coming down. We'll talk about if it's a buy the dip zone over there, since FARTCOIN has actually been one of the best performers. So smash the like button, hit the bell notification, and subscribe to the channel. We'll get straight into the show content today. And the topic is gold, right? Just quickly getting a little bit of data from ChatGPT over here, narrowing down what happened in the prior times where gold actually did put in those massive runs. So we got gold on the bottom, S&P 500 overlaid on the top side over here. And ultimately, we're only measuring from the 70s. And the reason for that is because that's actually where they broke away. President Nixon broke away from the gold standard. That was Bretton Woods. The massive, at least conspiracy around how the monetary system works and how the Fed came to power. So that's a story for another day. You guys can read up on that on your own. The Creatures of Jekyll Island, that's the book. Search it on YouTube. You'll probably find a video and you can learn a whole lot more about that. But 1971 to 74, we saw gold run 400%. And that was due to Bretton Woods, the oil crisis, stagflation, which came into play. Many are comparing the current economic environment to that of the 70s, possibly, where you're going into stagflation, right? So we saw fiat decoupling with inflation, and gold supremacy was the narrative. This in 1979 to 1980, we saw 240% move in gold. And that was the double-digit inflation, Iran crisis, and Volcker tightening on the economy, right? So the next one that we saw was 2001 to 2011, a 600% move. And ultimately, that was your dot-com crash, right? 2008 crisis, QE era. Gold was the store of value. And then we went into, exactly in that year, in 2008, you had your 5% move, and right now 25% in 2024, the tariff wars, right? That's currently the picture. What's interesting about this is a lot of people are wondering, why is Bitcoin not acting as digital gold 2.0, and not doing very, very well? But I think you have to take a little bit of a step back, because when you do look at these historical performances, right, you've seen what gold's done over here, ultimately 40%, 30%, or excuse me, let's just go on the left-hand side, 400%, 240%, 600%, 5%, and currently year-to-date, it's done 25%. But what has Bitcoin done? Bitcoin, since the lows, did a 7x, right? Around 700% ROI, very, very, very good. So Bitcoin has done very, very well. And when you mark it off on the chart over here, it really turns out that this narrative is a little bit of a nothing burger. Gold rallying does signify that something in the economy is breaking. It's something that you can look at. But if you do measure from the lows over here, that was, the end of the gold standard era. Here was your S&P 500. That's where it just chopped about. And then gold ran into a big move over here. S&P 500 held flat. And once gold put in its top, the S&P 500 started to rally aggressively towards the upside. The reason we're measuring against the S&P 500 is because that's what Bitcoin tracks most similar to, is the stock market, right? Right now, it's still a risk on asset. We have a look over here. Gold bottomed, the stock market topped, right? But if you keep going forward over here, you'll see that taking all the various different examples, we don't have enough data to conclusively come to the conclusion, at least, that if gold is going parabolic, that the stock market is going to move into a bear market, and so will crypto, right? It's not necessarily the case, because in this instance, you had gold topping over here in 2011, but pretty much you had the stock market bottoming. And as gold continued to draw down all the way into 2015 to put in its low, the stock market rallied up and put in new all-time highs, right? And then it consolidated. Gold put in its bottom over here, and gold put in the huge cup and handle formation, which it's now broken out of and is rallying into price discovery. And for the most part, the stock market still provided you with much greater gains, right? So if you're considering that when gold bottoms, the stock market should top, well, that's not exactly the case, because if you look over here, well, the stock market did run 220%, right? The stock market did a pretty big move over there. And when gold bottomed to here, that's also about 216%. So give or take, it's very, very, very similar. So will Bitcoin catch up to gold? I think that Bitcoin will trade more similarly to what the stock market has. And the stock market, you would be expecting, even if things got really, really, really bad, probably another 20% down. I would say it would be one of your worst case scenarios. And then you're going to see gold move, right? So we write about this in Whale Room. For those of you that do want more information on the economy, remember one of our traders over there and coaches, 𝗪𝗏𝗪, of course, dropping his economic edge report for those of you that do want that. Tariffs, liquidity, fallout, and the Fed paralysis. You guys can all get that. Remember, I spoke about yesterday, we're running a promotion. I said, don't go into Whale Room until you get the promotional code. If you do want to jump into Whale Room, here's the code, right? It's linked in the description below. It's limited, though, to the first 200 people, right? The first 200 people can utilize that code, save 20%, right? By using the promo code RISEN27, right? It's not cap sensitive, so you can put that in any way you want. RISEN27, you'll go through over here. You'll click join. Once you go through to join, click continue. Go in over here, and then you'll put your promo code in the bottom over there, and you can join. Cool. All right, now that we've got that out the way, let's get into the Bitcoin price analysis. You can see liquidity building both overhead as well as below price action over here. Liquidity does remain stronger still towards the upside, and we're in a very low volume environment, and you can see this. I warned of this leading into the Easter weekend. It's probably going to get even lower as we progress closer and closer towards Sunday, since the stock markets are closed today. I think they should be closed on Monday as well within the US. So Monday is probably also going to be a low volume environment. Have a look at that. Unreal. The last 24 hours, your liquidations have now dropped to 120. For the most part, we've been seeing those liquidations hovering around that 200 to 220 level. So that is very, very, very low. What this does mean is when we come into the following week, when the markets do start to reopen again, this is going to set the stage for possibly the start of the next big move, right? Because markets move through contraction and expansion, as I so often cover in the Whale School course content. Remember, it's like seasons, right? You go through, summer, autumn, winter, spring, and it's that contraction and expansion, contraction and expansion. When you look at the Bollinger Bands contract and expand. We move through ranges, and then you break out of the ranges into trends. Now we've seen a high time frame shift, as you guys know, a high time frame shift towards the downside, where price action has started to break out of some of those high time frame ranges. Ultimately, where Bitcoin was hovering between, $95,000 and $108,000, we broke towards the downside, which could be the start of a trend. Then we continue to range a little bit further, which is what we're currently doing. If we do break through the bottom of this trading range, that could signify continuation of the trend towards the downside. And that should, or at least would suggest a shift within the market. So pay attention when volumes are low. This is usually when the views drop off the most. Across all of the crypto YouTube channels. I look at all the other crypto traders and channels that are out there, and I know none of them are creating any content right now, right? And this is actually the time where you should be paying the absolute most attention. Upskill yourself, educate yourself. If you want to, there's a link below to join into Whale School. You can see daily exchange volume continues to diminish. Now, my expectation is that there's no way possible that when this refreshes later today, because it usually refreshes, the update occurs in about 2 hours from the live show. I would expect when I update this is going to continue that trajectory towards the downside, and it's probably even going to take out these lows. And it trades very similar to Bitcoin price, right? If you look over here, towards the end of November, this is where the volume was basing out off a very, very, very low volume. You could see that. Let's quickly maybe zoom out and we go over all time. So you could see the volume was basing out. And then when Trump was essentially coming into power, we saw that expansion towards the upside. Volume came in massively. It got priced in that he was taking over, and you got the huge move. Now the volume is threatening to take out those lows. The origin of the move, right? Think of this like an order block when it comes to trading that led into that big move. By Monday, you could take that level out, right? So as you watch the volume continue to drain from the market, oftentimes price will just slowly start to bleed out, right? You guys have probably seen this before in the meme coin market, in the AI agent market, in all these low market cap coins that get initial massive excitement and pumps, and then slowly it just starts to draw out and bleed out slowly but surely. Remember, this is the lifeblood of the crypto markets, right? Is the volume. So when volumes are low, which they are, expect that there is ultimately just going to be drawdown. The crypto fear and greed index sitting at 33 over here right now. So it's actually risen quite a lot since those lows. So we'll see. I do think that this will be a divergence given a lack of interest within the market, that if price were to slowly grind down towards new lows, new yearly lows, which our target zone is going to be around that $72,000 region, then my expectation would be that actually the fear and greed would still put in a higher read, right? Because if we do look at the fear and greed, remember, it was just a couple of days ago, it wasn't too long ago, about a month ago or so, that the fear and greed dropped down into those single digits, right? If we look at ETH BTC, it continues to draw down. This is now 13.69% from new lows, or at least from hitting that key zone, the yellow line. Yesterday, this was trading a little bit higher up here. It was around a 16% move down. So continuing to push towards the downside. Keep an eye out on that as well into the course of Monday, right? If we look at Bitcoin, well, you have officially got your first candle close above this downsloping trend line. Now, don't confuse the break of a trend like that in terms of a trend reversal, right? If you break above a resistance line that's moving towards the downside, a downsloping line, one single candle is not enough to suggest a complete shift in direction. Because ultimately, if you follow the direction of this trend, which way is it going? And the answer is it's still going down, right? And you still have this pocket over here perfectly in that volume profile, which lines up with the fair value gap. That still remains the target until such time as you can invalidate the short trade. And to invalidate the short trade, you need to break back above the 88,744 level, which is the level to reclaim. That remains the level to reclaim. Nothing has changed over here. And in a low volume environment, as I've suggested, price is more likely to roll over than to continue to move towards the upside. If you see price moving up in a low volume environment, which is exactly what you're seeing, that becomes a warning signal, right? So price is grinding up and volume is moving towards the downside. That becomes a warning signal. So please do be aware of that before you do start to long your longs. All right. We have the RSI, which has clearly broken this level. What we do want to focus on is specifically the weekly, because this weekly candle close is going to be very, very important. Remember, if we can get an actual breakout on the RSI in the weekly time frame, that would drastically favor the bulls for a chance to potentially take over in the coming weeks and months, just like we saw the prior times over here. So let's just quickly reset this over here perfectly, because there is a difference between the daily and the weekly over here, and we'll go with the line of best fit, which ultimately means the most amount of touch points without breaking any of those key levels. And that's what we're currently looking at, right? So what does it mean? Let's quickly see what it means over here. It means that if Bitcoin can close this weekly candle above $87,585, then your RSI in the weekly will continue to trend towards the upside. All right. If, however, price closes any lower than what it currently is, you do risk this immediately just popping back down into the range, and therefore this won't even be there. You won't see that on the weekly close chart, which would be a bad sign. Then you're looking for continuation towards the downside, and the first level of interest is, of course, $72,000. So price getting caught exactly in that death cross between the 50 and 200 MA. There it is. And you're coming into clear resistance. Remember, we buy support and we short sell resistance. Where are you right now? Well, you are at resistance, of course, right? So as you can see, the smarter play, of course, right now is to remain patient and wait instead for a reclaim of this key level. That would be your deviation above the top side of the range. And then you can look for higher prices. Otherwise, you know, if you are a sane individual, you would know that trends tend to continue. And there was your highs, there was your lower high, there was your lower high, there was your lower high coming into horizontal resistance and moving average resistance. There is your lower high. All right. I mean, am I crazy? Am I crazy for saying that? Of course, your momentum oscillators are slowly trending towards the upside, but it of course does depend on the time frame that you're looking at. We can use the 12-hour as opposed to the 24-hour for a little bit of a lead as to what may come next. And you can already see you're starting to get that bearish cross and roll over, right? We would need to see the midline between the red and the green over here to also slowly start to roll over, and the upper band to curl and the lower band to curl. And if you do get that, that's going to bleed into the daily time frame, right? Let's quickly use the 8-hour as well as a little bit of a lead and indication as to what could potentially come next. And then we can also have a look at the 4 hours. So there it is, 8 hour, you already got that bearish cross. You're already starting to roll over. Bears don't have that much momentum. Neither do bulls. You're kind of in a deadlock. It's like a tug of war against each other. You kind of break even at the moment. But that's what creates those tight ranges. That's what leads to the contraction in the market, and then contraction following contraction, you get massive expansion, right? That's where the big moves come in. Quickly having a look at the 4 hour, and then we'll look at some of the low time frames over here. All right, so 4 hour, not much over here, also kind of in the middle of no man's land, caught right in the middle of the trading range over there. In the short term, this is probably going to start to cross down, right? Similar to what happened over here. So do keep an eye out on that. That lines up with the diminishing volume within the market. Congratulations to all of you for being here, by the way. This is why it's a first come, first serve opportunity, because it's those of you who stick here through thick and thin that get the access to, these discounts when it comes to whale room. And you guys are here during the tough times when the market is boring. So having a look over here, this is our Monday range. Again, very, very little to comment on this chart. But what we can have a look at quickly is FARTCOIN. Where do I have FARTCOIN? Here it is. Here's FARTCOIN. FARTCOIN is starting to come down. There it is, breaking down back towards the Monday low. Very, very interesting. Why is this interesting? It's interesting that it's hitting the Monday low. Let's line it up with our other charts over here. Let's just quickly bring up FARTCOIN, which has been, of course, one of the top performers. And we need to bring this up. Here's why. Because I just discussed this with the Whale Room members yesterday. And we spoke about, they were asking, to gain an entry into FARTCOIN. I said, well, watch as it pulls back into this key level over here, possibly down towards the 50 to 60 cents region. And that's currently what you're getting. But what makes this more interesting is when we pull this back over here and we line up with the daily range, right? So if the daily is going to move into this zone over here, the fair value gap, the area of interest, let's just quickly tighten that up a little bit. There it is. You got your perfect fair value gap on the daily. You're coming into the zone over here between 67 and 60 cents, and you line that up with the Monday range. That means you might tag the monthly open. So if you do watch FARTCOIN squeeze all the way down into the monthly open, is this even the same? Is this even trading at the same price? 76. This is FAR. This is not FARTCOIN. Excuse me. Let's just quickly look at FARTCOIN over here. I thought that looked a little bit incorrect. Okay, let's just write the whole word out. FARTCOIN. No, 1 second. There we go. FARTCOIN USDT. Let's have a look at how that lines up. Hopefully it lines up like that, because it does. It's pretty good. It still lines up in the same way. Basically, it gives you the trigger plan. So lining the two up together. Daily fair value gap, as you guys can see over there. Going back onto the hourly chart over here, if you can find support at this daily fair value gap, the second that you reclaim the Monday low, opens up the long trade, right? Why? Because in low time frame trading, we consider this consolidation, manipulation below the bottom of the trading range reclaim, opens up the long trade, stop loss goes below, and you trade it back towards the Monday high and possible expansion beyond. All right, that is your power of 3. If you're confused by any of this, or you're just intrigued and want to learn a bit more and you want to take your trading to the next level, you can join into Whale School, right? It's linked below. In actual fact, you can join Whale School and you can win a Ferrari at the same time. How does that sound? Let me know how that sounds. How do you do that? If you go through to the link below, there it is. It's a 2-step process. Step number 1, click WeX over here. Sign up. When you've clicked that link, ultimately you can deposit and trade to win a Ferrari. Your user ID that gets generated, that's your unique number once you've joined WeX, can be used for any of the school course content. It will unlock full access to each and every single one of these schools, and we're adding more and more, right? So instead of paying, let's just quickly go over here. Instead of paying, if you go through to Whale School and you click that link, instead of paying $2,000, there it is, you can get in for free and stand a chance to win a Ferrari. So jump in. The next cohort, by the way, we're going to be talking about trading crypto stocks and commodities. And there's an extra benefit for those of you that do want to do this. Even if you've joined Whale School once or twice before, you can come again. There's always new things to learn. And there's a new section that we're unlocking. What is the new section? For those of you, can see some people are joining right now. Congratulations. For those of you that want the new section is going to be this, right? Vantage Markets, this is a commodities, stocks, and forex pair platform. We have a professional trader over here, Singh, and we're going to open this up for any of you that join into Whale School today. You're going to be able to get into Vantage Markets for free. So even if you don't decide to join Whale Room at a later stage and you only want access to this, by joining Whale School, you're going to get access to this section, which means you can trade the traditional markets as well. So we're going to have a big focus on traditional markets within this particular segment. All right, let's get into some of the chart requests. If there is anything else that you guys want to have a look at, very low volume environment, right? Very, very low volume environment. I see all of you want to win a Ferrari. Yes, you guys can win a Ferrari. Absolutely. Sloth Man, you want a Ferrari? Just sign up there. Everything is linked below. All the explanations over here are below. Ferrari, what are they valued at nowadays? Ferrari is about, depends which one you get, but it's going to be between about $250,000 and $1 million pending which Ferrari you get. So nice prize over there. Very, very nice prize over there. Okay, USDT dominance still holding the supporting trend line over here. We haven't got confirmation of a high low. We also don't have confirmation of a breakdown. And that's why the crypto markets are in such a rock and a hard place, right? Sitting in the middle of no man's land. We're still all just waiting for answers. And we probably only get those answers when the volume comes back into the market. But there are some lower time frame trade opportunities like this. I want to be very, very clear on FARTCOIN, right? You're coming into a fair value gap, but it's a little bit lower down. The closer you can get that towards 60, the better. If you can see this thing run all the way down to the previous month's high and resist breaking that level, that creates a really nice trade. You could enter in with a tight stop. So long this with a very tight stop loss, at least looking for the bounce. Eliminate the risk if it continues to squeeze up and reclaims the Monday low, because otherwise, you're taking on too much risk if you're entering at the Monday low and your stop loss is down here. That's going to create a 1-to-1 risk to reward ratio, which is not really great, right? So there's just a trade idea, right? It's just a trade idea. Expect that there will be bounces along the way. Even if it's going to continue bearish, it would probably reject there and continue down, which means you could time your entry from here to here, tighten your stops, and then it would break down. Or best case scenario for you is it reclaims, you confirm the deviation, and the power of 3 actually does play out. All right, let's have a look at a couple of the other coins. Let's quickly see things like, I saw Brett actually had a bit of a move the other day. Let's first get a high time frame overview on the daily. This obviously come from quite a height over here. It's pretty much just range bound. It's finding resistance over here at the previous month's mid-range. That is the main range trade. I don't know why I had those fibs there. Let's just clean that up. But I said previously, this is the level to clear, right? If you clear this level, there's a possibility transitioning from a tight ranging market into the start of a bigger relief rally. If we confirm a local high over here, we can lower this to that level over there. So we're simply just waiting. How's WIF doing? Okay, WIF still struggling. Remember, still a series of lower lows and lower highs, lower lows and lower highs, right? But a lot of these downtrends have really squeezed. So if you see on your momentum oscillators, a bit of divergence is playing out with the low lows, momentum oscillators moving up over here. You can easily squeeze back into the top of the trading range. That creates a bit of a move. All right, let's go to Sonic. Sonic is another one of the requests. So just range bound over here, chopping about. I would just wait for range low and keep watching if it holds range low. Okay, not much to comment on this. It's just, again, low volume, just grinding down. We probably have a look at Solana. Solana is actually holding up pretty well. It's maintaining this level. We also long on Solana via the trading bots. I think we have them. We don't have them linked below, but we can put them in. We can put the trading bots in over there. But Solana is still squeezing, right? Still squeezing into this region, holding it. You want it to maintain above the previous month's this month's open, which is $124. As long as it remains above $124, $125, the hope is alive that Solana's deviated this level and can squeeze a bit higher. All right. What else, guys? Yes, happy Good Friday. Happy Good Friday. That's why the promo code is saved, by the way. Of course, that's why the promo code is saved. It's not only, or it's risen at least. He hasn't risen yet, but he will rise on Monday, right? So it's risen 27. Risen 27 is your promo code. All right. What else? What else, guys? Render. Let's have a look at render. Quickly going back onto this chart. Last time we looked at render, it wasn't great, so I wouldn't expect magic. Please let me know the time frames as well, because it's going to be time frame dependent, right? So time frame dependent, render is squeezing into what was previous support, now potentially flipped into resistance. Based on the way that these candles are forming over here, if Bitcoin does hold up, I could easily see render squeezing up to about 475. 475, right? That's going to be the level. All right. 𝗪𝗏𝗡. Guys, we looked at 𝗪𝗏𝗡 as well yesterday. I see you guys have a lot of the same requests. Apologies for anyone that gets over the same charts that we keep bringing up over and over again. But we spoke about the potential for a bear flag. We said it can easily be invalidated if it breaks back above those levels. A lot of the times with these bear flags at the lows like this, you could end up with a deviation. But the truth is, does it look good? No, it doesn't. It looks really terrible, right? This is just a series of lower lows and lower highs. It just keeps grinding down, right? Of course, you could easily squeeze to the previous month's mid, still put in a lower high, and then ultimately make new lows. So what you're looking at right now is treat the Monday low as a key level, like with most charts, and you are attempting to reclaim that Monday low. So let's quickly have a look at 𝗪𝗏𝗡 on the low time frames. Maybe it's someone that just wants a quicker trade, a quick in-out trade. Then, this is the level to recapture, right? I mean, theoretically, in the very, very, very short term, of course, you've broken that level, starting to squeeze up, you're reclaiming the Monday range, but where's your invalidation if you were to go long on this? Doesn't really make sense to me. I'd rather wait. I'd rather wait for, much higher prices, break all the way up, come back down, that throw back into the range low. Then you can start to establish a really nice W formation and a bit of a range over here, right? You can see over there, W formation, up, high, low, W formation like that. But when you clear the neckline, that's where you start to break out. All right. All right. What else, guys? Let me know. PYTH. Okay, we can have a look at PYTH. I haven't looked at PYTH for a very, very long time. PYTH is, of course, the Oracle solution to the Solana chain. At least that's at the time what the narrative was. So let's go to PYTH. How is PYTH looking? And let's have a look on the daily just for some higher time frame perspective. Also, I mean, not great, right? It's just bled all the way through. What you guys have to understand, and we do cover this at length in Whale School, if you go into the market cycle section, right? Here's the market cycle section. If you go into this lesson, I talk specifically about portfolio management and how you want to read what phase of the market cycle we're in to determine whether you should continue to hold an altcoin or not. And most of the time, these altcoins will just bleed to Bitcoin. And the USD pairs will also bleed out pretty much to zero. So even if they're going up, they don't go up over time as much as Bitcoin. And that's what you need to be careful of, right? This is a very powerful downtrend. In fact, crypto, most of the retail traders should just pivot into low leverage swing short trades because most coins just go down over time. So there's much more money to be made for the select few that are actually just looking for swing shorts, right? This is a straight downtrend, but in the short term, what is happening? The aggressiveness of the downtrend has kind of slowed down. Ultimately, it's going to do what Bitcoin's done. It's still bearish as long as it remains. There's not even any hope of a reversal until this can get back above 0.1769. So call it 18 cents. Get back above 18 cents, and there is a bit of a chance of a reversal. All right, Super. We can have a look at Super as well. Let's quickly go to that. Super USDT. Super farm, I'm going to imagine, is not looking great. Also come off a big move, right? Big move towards the downside. Of course, these things can always put in a bit of a relief rally, but I'm still viewing this as the key major support. So even if it puts in a relief rally first, if you wanted this for some reason for the long term, I would still expect that it's going to make it into that 20 cents region. Quickly looking at this over here, though, let's expand it a little bit. It's just like the rest of the charts. It's range bound. So in the short term, could this hold as a mid-range level, over there and squeeze up to the monthly high? Absolutely, that's possible. But things only change if you can hold above that monthly high. This was the Trump pump, right? If you can retrace and start to reclaim the fake Trump pump over there, where he went on Twitter and posted bullish things about crypto, and immediately the next day we got a bearish engulfing candle. If you can start to get above these candles on most charts, which is your previous month's highs, then things begin to potentially shift. All right. And it's going to be heavily affected by what the Fed do, right? The Fed already came out this week and they said, we're not doing anything, right? Not yet. We might be forced to do something at a later date, they said, but not yet, not yet. All right, guys, that is it from me. Happy Easter to all of you. Make sure that you use the link below. Risen27 is your promo code for 27% off of Whale Room. Jump into Whale School. I'd love to see you there. I'll catch you all on the next one. I hope you have a lovely, lovely day, everyone. And we'll see you soon. Cheers for now.